Hi, I'm Grant Mundell, investment specialist with Equity Trustees with our November market review. Global equities had a rollercoaster month, falling early in the month on artificial intelligence related valuation concerns and, at least locally, a hawkish shift from the RBA. However, equities then staged a late month rally as trade pressures continued to ease post US China talks. Nvidia delivered a strong result, easing some tech related concerns, and expectations increased that the US Federal Reserve would cut rates in December following some softer US data and dovish Fed commentary. The ASX 200 ended the month down 2.7%, underperforming global equities, which ended up 0.4%. European and US markets slightly rose, while Asian markets fell. Locally, sectors that performed well included healthcare, consumer staples, and resources. Resource stocks have continued to benefit from a switch out of the major banks, with gold and lithium stocks performing particularly well during the month as their respective underlying commodity prices rallied strongly. Conversely, IT stocks were hit hard on global and stock-specific news, and interest rate-sensitive sectors such as property or A-REITs came off the boil as the market recalibrated their views on the next move by the RBA. An important data point locally was the higher than expected monthly inflation print, which led investors to believe the RBA rate cutting cycle is over. In fact, some economists now expect the next move from the RBA is now up. This saw the local bond market sell off, with 10-year bond yields rising 22 basis points to climb above 4.5%. Much of the other domestic economic data was also strong, with house prices rising, capex spend increasing strongly, and credit growth surging. Within equities, we have been a little bit cautious given elevated valuation multiples, with the market running ahead of earnings. Following the recent retracement in markets and earnings upgrades over the last 2 months, multiples are not as excessive, but still sit in expensive territory. However, the earnings growth landscape in 2026 looks very strong locally and globally, with the ASX 200 earnings per share expected to rise around 8 to 9%, and US and global equities around 13 to 14%. 2026 profit growth is being supported by improving economic growth, stimulus from governments or central banks, and not just tech stocks, but a broadening of earnings growth from other parts of the market. While headline valuation multiples look somewhat onerous, we do believe there are pockets of value within certain sectors and markets, and therefore believe an active approach to security and asset selection in a diversified manner can produce strong risk-adjusted returns. Further, we believe that at times of high valuations, a quality investment approach with valuation discipline can protect capital in the event of a market sell-off. And lastly, for income-seeking investors, we're expecting ASX 200 dividends to start increasing again after 3 years of declines also. We'd like to take this opportunity to wish everyone a safe and prosperous holiday period ahead.